Good morning, hello and welcome to Moneycontrol's live stream. You tuned into a fresh edition of Opening Bell with me, Lavisha Darat. And we are waking up to some positive news because from the US, where the government shutdown has been continuing for 40 days, but the Senate has begun voting to end the shutdown. So if this bill passes from the Senate, it will still go through the process of going to the US House of Representatives, where the lawmakers will debate over it, and finally it will go to President Donald Trump's desk where he signs it. So it is a process. But yes, the US futures have been appreciating it this morning, given that there is some progress when it comes to the deadlock with the US government as well. 40 days of deadlock has happened with the US government. And of course, this marks as a key step towards ending this deadlock as well. But yes, Asia Pacific markets, they have also cheered this move. Japanese markets have advanced. Korean markets have been leading gains from the Asia Pacific. But how all of these cues will be digested by our own markets is something that we need to watch out for, because last week we did see Nifty declining by 1.5% because of some concerns over the AI bubble bust as well. So we'll watch if this week also this particular sentiment dominates on the street as well. But apart from that, stock-specific action will be continuing, given that it is the last lap of the earnings season. We'll also be taking your stock-related queries, so keep dropping them on our live feed. But before that, let's take a quick check of the top headlines this hour. Stocks on Wall Street end Friday's session mixed. The Nasdaq Composite ended lower amid pressured AI stocks. Asia Pacific markets recovered this morning after AI valuation concerns diluted this morning. Meanwhile, the pre-open rates are indicating a muted start for the Indian markets. Crude oil prices edge up after a volatile session on Friday but remain $65 per barrel. Gold prices continue to surge with dollar softening and uncertainty continuing due to the US government shutdown. Automaker Bajaj Auto posted an inline set of second quarter performance with profits and revenue inching higher and margins coming in at multi-quarter higher. Tata Group's retail arm Trent saw revenue grow slower and higher depreciation impacted profits. And in major earnings today, Bajaj Finance and ONGC will be reporting their second quarter results along with Vodafone Idea. And finally, we have Lenskart, which will be making its D-Street debut today after the IPO was subscribed 28 times. The grey market premium, however, has turned zero ahead of its listing. All right, just 30 seconds to go before we get to the opening bell. But yes, let's quickly get on board with our technical expert of the show. Joining me is Rajesh Palveya, Senior Vice President Research and Head in Technical Derivatives at Axis Securities. Rajesh, good morning. Last week we did see Nifty end lower by about 1.5%. But what can we watch out this week? We are waking up to some positive global cues.
Yeah, so there was corrective move in the previous week, and but Nifty is now trading near to its important support area, which is placed at around 25,500, which is very important and crucial for this corrective move. If Nifty able to defend these levels, some pullback action cannot be ruled out from the current level. But in the pullback, 25,650 is the immediate hurdle. If it's able to surpass those levels, then yes, we may see some more, a short covering action. And possibly Nifty may attempt to, again surpass 20-day moving average, which is placed at around 25,670, 680 zone. So that is important level to watch for on the higher side. So those who are already on the long side of trade, they should follow the stop loss of 25,500 at this juncture on the trading side. But Bank Nifty is looking more promising compared to the Nifty, and as Bank Nifty is almost trading around 58,000, if it's continues to trade above 58,000, I think here we may see further more upside towards 58,300 to 400. So Bank Nifty is looking one notch better compared to the Nifty, so one can look to buy Bank Nifty for upside target of 58,300 to 400. On the downside, 57,800 needs to keep as a stop loss.
All right, we'll watch out those moves from the Nifty. But yes, let's take the opening rates of how the markets have opened as of now. Let's take a look. Sensex is up by about 200 points. Nifty is also up by about 70 points, above that 25,500 mark as of now. If you look at the sectoral moves, how we have opened on that front, If you look at Nifty Realty Index, it's flat with a positive bias. Nifty IT Index, after his last week's, it was one of the top sectoral laggards. Today, it has opened with about a 0.5% gains. Nifty Auto Index also opened with about 0.1% gains. And if you look at Nifty Pharma Index, also with about 0.4% gains. So all in all of the sectoral indices have opened in the positive territory. Nifty also above that 25,500 mark. And if you look at the Bank Nifty Index, that has also opened with about 0.1% gains. Mid cap and small cap indices, both of them have been opening in the positive territory. Mid caps with about 0.2% gain, small caps with about 0.3% gain as of now. But yes, let's take a look at the Nifty 50 top gainers and losers. Asian Paints reacting well to its second quarter results, ahead of its results. Nearly a percent gains coming in for the Asian Paints. L&T also doing well, 0.8% gains coming in there. Reliance Industries with about 0.7% gains. Hindalco reacting well to its second quarter results. Shriram Finance with about 0.5% gains. And among the top losers, you can see Trent after its slower growth in terms of revenue. And of course, it did miss estimates from the second quarter front. And that is why you can see a decline of about 4%. Apollo Hospital also seeing a decline of about 1%. Maruti Suzuki, Max Healthcare, some of the other top losers on the Nifty 50 as well. But yes, let's once again address about Trent, one of the top Nifty losers. Rajesh, what can we watch out here? I mean, the brokerages have been quite cautious after the second quarter performance.
Yeah, so there is a continuity of downtrend for Trent, and again, in today's fall, again, stock has already broken the immediate support area, which was placed at around 4600 kind of zone. So if it continues to trade below 4600, I think further more downside we could see in this counter. And in this process, I think on the lower side, 4100 would be the next level for the trend. So structure is weak. Series of low top, lower bottom formation is taking place on the daily as weekly chart. So sell on rise is the strategy until the stock not able to surpass above 4800 level on a weekly closing basis. So I think if you get any opportunity on the higher side, should exit from the counter, as technical structure is still weak, and we believe that 4100 could be the next level on the downside.
Okay, all right. That is the view coming in for Trent as well. Let's take some viewer queries that is dropping on our live feed then. The first query coming in from Naveen is asking the view on Hindalco. Of course, the stock is not doing well after its second quarter results. The net profit, however, has jumped by about 21% on a year-on-year basis. Revenue has also risen by about 13% on a year-on-year basis. And the surge has been driven by some strong performance in its India business. Hindalco, what is your view on the counter, Rajesh? How does the stock look like on the charts? Today, the stock, however, it's flat but with a positive bias, 0.5% gains coming in there. But from a 1 month perspective, the stock has been fairly range bound. What would you see the next levels to be?
So Lovisha, overall long-term structure is bullish, but yes, on the near-term structure, some profit taking is happening in this counter. In this process, stock is now trading in between 20-day, 50-day moving average range. So on the downside, the crucial and important support area is placed at around 765. So if it's break below 765, then we may see further more unwinding trade to take place, and then maybe we could see further lower trajectory for the counter. But till 765 is intact, I think there is a possibility of some pullback action. And in pullback, I think one needs to closely watch 805, which is very important level to watch for. If stock crosses 805, then I think we could see a good recovery in this counter. And on the higher side, possible upward momentum towards 830, 835, we could see in the near term perspective. Overall, metal stocks are showing sign of strength, and most of the metal stocks are still holding the ground on the near term, short term setup. So I think Hindalco may also exhibit same kind of behavior and possible upward momentum we could see. So follow the stop loss of 765 if you are already on the long side of trade.
Okay, all right. that is the view coming in for Hindalco. Today, however, the stock has been flat with a positive bias after its second quarter results. But yes, reacting well to its second quarter performance, that is your Bajaj Auto. Well, the company did see that the net profit has grown by about 23% on a year-on-year basis. It has been in line with estimates, while revenue has grown by about 14% on a year-on-year basis. Brokerages have also remained quite positive on the counter following its second quarter results. If you look at CLSA, they have given out an outperform call, target price of about 10,604 rupees. They believe that the margin has come in higher than estimates, and better realization in exports due to some currency tailwinds along with operating leverage has aided the performance for the second quarter for Bajaj Auto as well. And going ahead, they believe that the share of premium motorcycle will continue to rise. They believe that the domestic second two-wheeler volume growth is expected to grow from here on as well. But yes, Rajesh, coming back to you, how does the stock look like? I mean, past 1 month, the stock has been fairly range bound. Do you expect this trend to continue?
So stock is in consolidation range only, and looking at the weekly and monthly structure, we believe that some more consolidation is likely to be there in this counter for some more couple of weeks until the stock not manages to cross above 9,000 level. I think we may see a range bound activity, like on the higher side 9,000 would be the major supply zone, and on the downside 8,500 would be the support area for this consolidation. So this 500 point consolidation we may see for next couple of week, and either side breakout will decide the major direction for the counter. As the overall structure is looking positive, so I think any minor decline should be used as a buying opportunity. One can buy and accumulate. Keep your stop loss around 8,500. Once stock manages to cross above 9,000 level, one can add more position for further more upward target of 9,500 to 600.
Okay, all right. 9,000 level, and we can add more on those levels for Bajaj Auto as well. Today, the stock is flat but with a positive bias. Let's move on and take another viewer query that is flashing on our screen. That is coming in from Aman Jain. He's asking the view on Irida. Rajesh, how does the stock look like to you? I mean, it's on the lower range bound territory, 140 to 150 levels. That is where the stock has been oscillating. But what is your view on the counter?
So I think it's an underperforming stock and not giving any kind of return to the investor. A trader stock is moving in very tight range since last couple of month itself. Until the stock not crosses above 170 zone, I think trend is likely to exhibit on the slightly weaker as well as sideways kind of zone. On the downside, the crucial support is placed at around 140. If any breakdown happens below 140, then we could see further more corrective move in this counter, and possible down move towards 130, 125 we could see in the corrective move. So my advice would be, if you get any pullback towards 165, 170 zone should be used as an exit opportunity, as the stock is still in the weaker zone for the medium term perspective.
Okay, all right. That's the view coming in for Irida. Let's take another viewer query then. We have Naveen, who's been asking the fresh entry levels for L&T Finance. Of course, Rajesh, we did see that the counter had hit a new high in the last week as well, and in the past 1 month the stock has rallied quite sharply. But going ahead, do you expect this trend to continue, and what is the next target level what one can watch out for?
So very strong chart structure, and this is the fourth consecutive month where stock is making higher high-low formation, which is a sign of sustained buying action is taking place. Stock is trading at all-time high trajectory. It's outperformer stock in the NBFC basket. The way stock is holding the ground across all time frame, I think any minor decline should be used as a buying opportunity until the stock not breaks below 290 zone. So till stock is trading about 290, any minor decline is a buying opportunity. On the high side, maybe we could see further higher level towards 330 to 340 also in the continuation of this uptrend.
Okay, all right. That's the view coming in for L&T Finance. Let's take another viewer query then. We have CSAT, who's been asking the view on Apollo Microsystems for accumulating. Satya is asking the view on this. Rajesh, what is your view on Apollo Microsystems? I mean, the stock did see a good breakout, but after then it has entered a consolidation zone. Can we expect this trend to continue?
So since last couple of week, there is corrective move is taking place in this counter. Now stock is trading below to 20-day, 50-day moving average, which is a sign of weakness on the near-term chart. But if we analyze on the long-term chart, yes, stock is holding the strength. In this correction, the important support area is placed at around 255, 250 zone, which is very important and crucial for long-term setup. So those who are looking for a little, longer time horizon can buy and accumulate this counter. On the downside, 250 needs to keep as a stop loss. On the higher side, 285 is the crucial supply zone. So if stock manages to surpass 285, then we could see a resumption of uptrend and then possible extension of rally towards 310 to 320 we could see. So buy in the decline, keep a stop loss of 250 if you have little, longer horizon to buy this counter.
Okay, all right. Apollo Microsystems, that is the view coming in. Let's take one of the stock, that is your Shipping Corporation of India. The stock is not reacting well to its second quarter results. Of course, we did see that the net profit has fallen to about 35% on a year-on-year basis. Revenue has also slipped by about 8% on a year-on-year basis. But yes, the stock did see a good breakout, but today the stock is not reacting well. 6% downtake coming in for Shipping Corporation. Rajesh, what is your view on the counter? Can we expect the slide to continue?
So stock has witnessed a very strong rally in the previous month, but yes, some profit taking is happening from the higher level. 280 acted as a steep resistance for this rally. Yes, now stock after this corrective move, stock is now trading almost near to its 20-day moving average, which is placed at around 245 to 47 zone. So 245 needs to hold out to, again show some pullback action. If it breaks below 245, maybe we could see some more profit taking towards 235, 230 zone also. So those who wants to buy, wait for, this supply pressure to settle down first. Whether the stock able to hold 245 or not, that needs to watch closely in the today's session or in next couple of days. If it's able to defend this 245, yes, then one can deploy some long trade with stop loss of 242 and pullback first target would be around 265 to 270, where again one needs to review it.
Okay, all right. That's the view coming in for Shipping Corporation. Then let's take another viewer query. We have Komal Makhija has been asking the view on Vedanta for a fresh entry for a long-term horizon. Of course, we did discuss about Hindalco earlier, Rajesh, but what is your view on the Vedanta? I mean, the stock has rallied well in the past 1 month, up by about 8%.
So as I mentioned that, metal is a space where, we are seeing that, a lot of buying interest is taking place, be it Vedanta, National Aluminum. I think stock is in bullish trajectory for near term to short term perspective. Stock managed to give fresh breakout in the previous week itself. Looking at the breakout, we believe that, if it continues to trade above 510, we could see further another round of rally in this counter and then possible target towards 540, 45 we may see in the near term perspective. So keep a stop loss of 510 to hold the position in Vedanta.
Okay, hold the position in Vedanta then. All right. That is the view coming in Vedanta. Let's also discuss about Nalco, how the stock has been reacting to its second quarter results because the profit has risen by about 37% on a year-on-year basis and revenue is also up by about 32% on a year-on-year basis. But yes, coming to you, Rajesh, how does the stock look like? I mean, the stock is reacting well, nearly 8% gains coming in for the counter and it's now above that 250 mark.
Yeah, very strong really in this counter and the way the stock is moving in upsloping channel on a weekly chart. Looking at the today's buying action, we believe that if it's continues to trade about 248 to 50 zone, I think another leg of rally towards 265 we could see in the near term perspective. So I think trail is stop loss towards 248 to hold the position. Maybe we could see another target of 260, 65.
Okay, 260, 265 of Nalco we can watch out for. That is the view coming in. Let's also discuss about Ashoka Buildcon. Well, the company has received a letter of acceptance from Northern Western Railway, which is Ajmer, for about 540 crore rupees to upgrade the electric traction system as well. But yes, the stock has been range bound in a lower range. But yes, Ashoka Buildcon, how does the stock look like for you, Rajesh?
So still in consolidation, stock not able to cross its major supply zone, which is placed at around 210 to 215 zone. So any breakout about 215 can attract more buying action, and then possible rally towards 225, 230 we could see. But until the stock not crosses these level, maybe we could see further more consolidation. On the downside, 195 is the important level to watch for. If it's break below 195, then maybe we could see more profit taking to initiate. So I think range bound activity 195 to 215, either side breakout will decide the major direction for the counter.
Okay, all right. This is the view coming in for Ashoka Buildcon. Let's take another viewer query. We have RP Kar who's been asking the view on auto stocks, primarily for M&M and Hyundai Motors. Of course, both of these counters have reported a good set of Q2 numbers, and the stocks have been reacting well to the results as well. But yes, Rajesh, for you, from both of these, how do they look on the charts?
So M&M is in bullish trajectory only. Some consolidation is happening, but looking at the near-term, short-term structure, we do hold our bullish view. Once the stock crosses about 3,700, 3,710, so I think we could see a good amount of rally towards 3,800 to 3,850 for Mahindra and Mahindra. So buy on decline would be the strategy. Any minor dip should be used as a buying opportunity till stock is trading above 3580 zone. For Hyundai Motor, some corrective move is happening. So looking at the near term, short term structure, 2450 is the key hurdle for the counter. If stock crosses 2450, yes, we could see again buying interest to resume in this counter, and then 2600 to 2650 would be the next target. In this corrective move, the immediate and important support area is placed at around 2300. So that level needs to watch closely. If it breaks below 2300, yes, we may see further more profit taking in this counter, and then stock may slide further to 2200 level. So M&M is looking better compared to Hyundai Motor in these two stocks.
Okay, all right. M&M is looking better than Hyundai Motor. All right, let's take another viewer query. Then we have Narendra Shah who's been asking the view on Suzlon Energy on how the counter looks like. Rajesh, Suzlon Energy, any views on the counter? I mean, we did see a good breakout in the counter, but right now the stock is still showing some mild moves of about 1% or so.
So stock has witnessed some profit taking post numbers, and still stock is holding above 50-day, 20-day moving average. So there is a possibility that after once the stock able to absorb all this supply pressure, maybe we could see another leg of rally. So on the downside, 55 needs to keep as a stop loss. If it's break below 55, then exit from the counter. Till stock is holding above 55, there is a possibility that again stock may attempt to give breakout above 60 level, and once that happen, then possible rally to unfold towards 64 to 65 level.
Okay, okay, all right. That is the view coming in for Suzlon Energy as well. We have another viewer query, that is your Aisha, who's been asking the view that she's been holding Union Bank, and is it time to book profits or further upside is expected? Not just this, but of course, Rajesh, the entire PSU banking pack has seen quite a stellar run up. And what should be the suggestion to investors? I mean, should they hold or should they book profits at the current levels?
So looking at the PSU banking basket, we do hold bullish view, and Union Bank is again our top buy stock from the PSU banking basket. The way stock managed to give breakout on the long-term chart, I think we could see stock to really stock to continue further more strength, and then possible really towards 165, 170 we may see in the near term to short term basis. So Union Bank is buy, and on the downside, stop loss should be placed at around 147. If I look at other PSU banking basket, I think Bank of Baroda, Canara Bank, Bank of India, all these banks are showing sign of strength. So I think one should remain invested in the PSU banking basket, and I think we may see another leg of rally in most of the PSU banking stocks, as a whole basket is showing sign of strength. And again, as Bank Nifty is also showing strength above trading above 58,000 levels. So I think we may see some outperformance in the PSU banking basket. Bank of Baroda is also our choice from this space. Once Bank of Baroda crosses about 295, I think here also we could see a rally to unfold towards 310 to 315. On the downside, one needs to keep a stop loss towards 282.
Okay, 282 is a stop loss for those counters as well. Right, let's take another viewer query. That is your coming in from Geetu Sandesh. She's been asking the view on Aditya Birla Capital for a fresh entry. Of course, the stock has seen a good run up, Rajesh, from the past 1 month, and so far this year also the stock has seen a good run up. But would you advise for a fresh entry at the current levels?
So stock is trading near to its all-time high trajectory, only very strong really in last couple of months. And looking at the breakout on the long-term chart, we do hold bullish view till stock is trading above 310 level. I think any minor decline should be used as a buying opportunity on the higher side. Maybe we could see a target towards 355 to 360. So hold the position and trail stop loss towards 320.
Okay, all right. That's all the time we have for queries. But yes, Rajesh, do let us know what are your top picks at this hour.
So as I mentioned that, we do hold a bullish view on the PSU banking basket. So Union Bank, we have already discussed. So I think one can continue with this trade. Another stock where we are focusing is from the NBFC space, and Shriram Finance is another choice from NBFC basket, as most of the NBFC stocks are showing strength. So we believe that Shriram Finance can also show some of the rally from the current level, as long-term structure is bullish, and we are projecting target of 855 to 860. On the downside, one needs to keep stop loss towards 800. And another stock where we are focusing at this juncture is from capital goods space, and I think L&T would be the stock where one can focus at this juncture. After a brief corrective move, again we are seeing a sign of reversal after this corrective move. So if its stocks continues to trade above 3880, I think we may see a rally towards 3980 to 4030 kind of zone. So L&T is looking promising. And one more space where we are focusing is capital goods, capital market related stock. So from that basket, I think BSC and Angel One, these two stocks are looking attractive. So one can focus on these two stocks, and we believe that the way BSC has moved up in last week, I think after a brief consolidation, we could see another leg of rally, and then possible target of 2800 to 2850. We may see in the near term to short term. So BSC one can buy and accumulate. On the downside. 2580 needs to keep as a stop loss.
Okay, all right. Those are the two stocks that we need to watch out for. But yes, so with that, we have to let you go, Rajesh. But thank you so much for your time and connecting with us.
Thank you.
All right, let's take a quick check of the markets, how we are standing up as of now. Well, Sensex is still up with about 250 points gain. Nifty is also doing well, but above that 25,500 mark as of now. If you look at from the sectoral perspective, barring the media index, all of the sectoral indices have been swimming in the positive territory. Banks, auto, both of them are in the positive terrain. Mid cap and small cap indices have also been doing well with about nearly a 0.4% gains as of now. On the other hand, if you look at the weakness, that is only coming from the media pockets. Other than that, auto index flat with a positive bias. Nifty realty index with about 0.3% gain. IT index also doing well with about 0.5% gains as well. But yes, very mild moves coming in from a sectoral gainers. Very stock specific action continues given that we are in the last lap of the earnings season. So of course, there are companies which are reacting well to its second quarter performance, and some of the companies reacting well ahead of its second quarter performance as well. But yes, before I move on to our next guest of the show, let me introduce you once again to our Moneycontrol Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls and investment ideas from SEBI registered experts, pre-identified chart patterns and AI-powered stock alerts right on your WhatsApp to help you trade and invest with confidence. So you can download the Moneycontrol app today and subscribe to Super Pro today itself. All right. right, with that, let's quickly move on to our next guest of the show. We have Manoj Baheti, founder and fund manager of Carnelian Asset Management, joining us. Manoj, good morning. I mean, there are some positive news that is coming in from the US markets, given that the Senate has begun the voting to reopen the government. But what are you watching out from here?
Good morning, Lavisha. I think definitely, I think from the US we are getting some positive views. But if back home, if we look at our domestic market, I think the fundamentals of domestic market are intact, and I don't think that what is happening in US it is going to impact our domestic market in a long way. So I think if one look at the domestic market, our earnings which have recently means which earnings season which is recently going on, we are seeing a very good traction in terms of the earning growth trajectory. The growth is coming back, and over next 2 quarters we foresee that sequential improvement earning growth trajectory. So we continue to maintain our bullish stance on domestic market. What is happening in US, I think it may have a short term noise or short term impact, but it is unlikely to have a long term impact on domestic markets.
Okay. But we still have that overhang of the trade deal front. So is this something that the market is already priced in? And how would you suggest investors to go about all of these export-oriented themes from here on?
I think if we look at the way the market has moved over last 5 6 months, I think all the negatives of the trade or the tariff is already priced in, and we expect like sooner or later we will see a positive trade deal between India and US. But I think if one look at that the impact of domestic factor, like the kind of GST cut which has like supported the domestic demand, I think it has much far reaching effect than the US tariffs. India have a minuscule exposure to US, and within that only a select items are impacted by US tariff. Even after US tariff, I think the Indian economy sales growth is happening in a positive note. So I would rather see more domestic factors, and I'm at the same time I'm quite optimistic that there will be a positive outcome of the trade deal. Even if you see the recent announcement which has happened both from US side and India side, we see a lot of like positive clues that the trade deal is moving in a right direction.
Okay. Manoj, I'll shift the conversation to the AI bubble bust, and that the sentiment that has been very concerned for India as well. I mean, do you believe that India could benefit out of this AI bubble bust that the US markets and of course the entire global markets have been talking about?
Oh, I think, see, AI is something, this is not the first time that there is a new technology innovation which is happening, like right from internet to Y2K and thereafter like migration to cloud. At each migration, India has benefited, and I think even in the AI world, India will play a big role. Like once the efficiency comes in on account of AI, there will be number of apps which are required to be built, which will support AI. And I think India's IT sector, especially the companies which are agile, which are like adapting themselves to AI world. So India will be definitely benefited even in the AI world. There may be short-term disruption, maybe because of the efficiency gains. There may be short-term impact on revenues, profitability, but over medium to long term, I think India will play a meaningful role in the AI journey, the way India has played earlier also in various tech transformation.
Okay. But Manoj, do you believe that the foreign money which has been rotating out of India to some of the AI focused markets, for instance, you have China and Taiwan or even Philippines, so does this mean that once the bubble bust could happen or potentially is on the charts or something, then we could see some money coming back to India as well?
See, I think if we see last 1 year, means India's valuation has become much better as compared to other nations. Like India is trading at a steep discount. If we see the price to earning multiple of India vis-a-vis price to earning multiple of US and other developed economies, I think India's price to earning multiple has come to a much reasonable level. And on top of it, this price to earning multiple is supported by growth coming back, good ROEs, robust liquidity in the system, and along with means both fiscal and monetary stimulus supporting Indian market. And on top of it, like in the recent results also, we have seen green shoots on private sector capex. Like the largest infra company L&T has commented that they are seeing enough green shoots on the private sector capex that domestic order win was significantly higher. This quarter. So with all these factors around, I think it is just a matter of time. Ultimately, even these means all these FIs, they have to create alpha, they have to generate returns. So I think it will be very difficult to remain absent from a growth market, from a market which generate good ROEs, as well as the market where now valuation has become much more reasonable than what they were 6-8 months back.
Okay, okay. Manoj, I'll come back to the sectoral moves that is taking place in the market. I'll talk about PSU banks because they have been rallying quite well. Last week also they had, defied the subdued market sentiment. But do you believe that there is more leg of runway still there for the PSU banking pack? How do you make sense of this particular sector?
I think, Lovisha, last time also, I think when we have interacted, one thing like we mentioned that we are having a bullish stance on entire BFSI, and within BFSI, we have also mentioned that PSU banks are trading at a much reasonable valuation. If one compare with the kind of asset quality, growth profile, ROE trajectory, still many of the PSU banks are available at less than one price to book multiple for, and when the credit growth is coming back in the system, when the bank's ROEs are showing significant improvement, like most of the PSU banks are in the trajectory of 13 to 15% ROEs, and along with good asset quality. So I think there is a clear indication or clear indication of likely re-rating PSU banks which are like available at zero point 0.8, zero point 0.9, especially banks which are delivering good growth, good asset qualities, good ROEs. I think there is a strong case of valuation re-rating. I won't be surprised that this zero point 0.8 will move to 1.2, 1.3, 1.4 times. So we are seeing almost 40 to 50% kind of upside in the PSU banks, mainly on account of the valuation re-rating, followed by earning growth trajectory. So we believe that in the PSU banks, the uptick has just started, and this journey should continue for, I would say, fairly medium term going forward.
Okay, okay, all right. Manoj, status out, I mean, apart from PSU Bank, any other big theme that you're watching out for? Anything that you're underweight about as of now?
So we are very bullish on manufacturing in India. Within manufacturing, we are bullish on CDMO, healthcare, auto ancillaries. I think clearly we are seeing, like, if you one look at the kind of numbers which CDMO companies have delivered across, I think very good set of numbers. And along with that, all these CDMO companies are talking record high capex over next 3 to 5 years. So I think this is one of the sector, healthcare and CDMO and biosimilars. We are very positive. BFSI, I already mentioned that we continue to remain a positive stance. And one of the sector where we have become incrementally very positive is consumer discretionary, and we even classify automobiles in the consumer discretionary sector. So automobiles and consumer discretionary also are sectors where we are seeing good upside from here. And within manufacturing, even power ancillaries is a sector which one should look. There is a huge opportunity of growth there. Capital goods is also means earning momentum should do well, but one has to be very, very cautious about the valuation because many of the stocks in capital goods are not available anymore cheaper. Few of the sectors like where I would keep a cautious stance is real estate. I think real estate sector may take a pause, and the other sector where like maybe in medium term things may be little challenging is IT sector. But I think over medium term, we are very, very positive on IT sector, looking at the kind of deal wins which is happening. And I think within 6 months time, we will see even IT sector will start doing well.
Okay, all right. You're bullish on IT as well. All right. Apart from earnings season, I mean, Manoj, what is the next big trigger that we are watching out from a market perspective? I mean, we are in the last lap of the earnings season. We have had, GST cuts which have already been priced in for the markets. But anything that the markets are yet to price in?
I think one of the thing which is not yet priced in is India-US trade deal. I think once that announcement comes, I think the overhang or the psychological overhang which the market is facing, I think that will. So one thing one should watch is the US trade bill, and the second thing is that the stance of Reserve Bank of India. I think looking at the kind of benign inflation which India is having, whether the rate cut trajectory or whether the accommodatory stance will continue, which we believe it should continue because the new governor has already indicated by his actions that he will prefer growth. And he has enabled Indian economy by like putting surplus liquidity into the system as well as by having series of rate cuts. So I think these two things one should closely watch for. And other than that, I think there will be a secular earning growth trajectory from here onwards. Quarter on quarter, we should see like sequential growth in earning, and I think next year we will see a means India comfortably placed in double-digit, high-teen kind of earning growth trajectory.
Okay, all right. All right, Manoj, with that we have to let you go. But thank you so much for your time and connecting with us.
Thank you. Pleasure interacting with you. Bye bye.
All right, let's take a quick check of the markets. Well, the Sensex is up by about 300 points. Nifty is also above that 25,550 mark as of now. And barring your media and earlier, like we were talking about the PSU banks, which have made a smart comeback in the past 2 months, we are seeing some profit booking on those names. Nifty PSU bank down with flat but with a negative bias. Other than that, we have seen some buying interest coming in for IT stocks. Metal stocks have been doing well with about 0.7% gains. Pharma stocks have also been taking an upper hand, and Nifty Realty Index has also been exhibiting some positive moves with about 0.3% gain. On the other hand, if you look at the Bank Nifty Index, nearly 0.3% gain coming in for the Bank Nifty. Mid cap and small cap indices, both of them continue to remain in the positive territory. But yes, the stock specific action continues ahead of its second quarter results. Asian Paints reacting well ahead of its second quarter results. A 1% gain coming in for the counter and one of the top Nifty gainers as well. Infosys also with about a percent gain. So Reliance Industries, ONGC, some of the other counters which is dominating the Nifty 50 gainers list. But yes, with that we have come to an end of this edition of Opening Bell. Do check in at 3 p.m. for Closing Bell, and we will understand how the market is developed with our experts, and we'll also discuss what the stocks have grabbed their headline. Until then, signing off, do stay tuned to moneycontrol.com for all the news updates and market insights.